Using your IRA or 401k to buy a house. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. Welcome to another episode of Adam Talks. Hope all is well and everyone's having a wonderful day. I wanted to do today's podcast because mortgage rates at 7+%, and I've got a number of clients, friends, family as well, saying, hey, Adam, is there a way I can potentially use my retirement account? Since you are the IRA and 401k expert, how can I potentially use my retirement account to buy a house? First-time home buyers, listen up. There are some ways. We have not been in this type of interest rate environment in a long time, right? We got used to cheap money. Over the last 10 years, any interest rate over 4 or 5% just was something that would give us pause. Now, we're seeing an interest rate environment where mortgage rates are going to cost anywhere from 7. So I saw 30-year fixed at 7.6%, 10-year, 6-year ARM 7.3%, 15-year fixed at 6.7%. This is with a 20% down payment. Okay, if you're going to 15% down payment, you're looking at higher interest rates. If you're going to 10% down payment, you're also going up. Okay, so these rates are the highest we've seen in a long time, as many, many, many years. So what's happening now is we've had a lockdown staring contest in the housing market where sellers aren't excited about the level of buyer activity, and buyers are kind of waiting, saying, hey, I think prices are coming down. I hope interest rates are going to come down. The stock market's recently had a bit of a rebound because the feeling on the street is that inflation may not be as bad as we think, and there's a potential for rates to come down in 23. If that's the case, mortgage rates will come down as well. So we could be in a situation in the next 10 to 20 months where the real estate market basically just stays idle. There's just not a lot of activity. But if you're a first-time home buyer, or you just want to potentially use some retirement money to buy homes because you feel like prices are coming down, or you're moving somewhere and you need to buy a house and you need some extra money for a down payment, there are opportunities, right? The whole idea of being able to put at least 10% down is you're not going to get a house with less than 10% down. It's just really, really difficult, if not impossible. Pre-2008, yeah, you could do it. Now you're going to need 10% to 20% down. And you're still going to be paying interest rates of 6.5 to 7.5%, which are super steep. But at least you have an opportunity to buy the house. So this podcast is all about, hey, if you have some IRA or 401k funds, can you use those funds? And if you can, what are the most tax efficient ways to use those funds to at least put towards a home? So first things first, if you're a first-time home buyer, Section 72T of the Internal Revenue Code is your friend. And it will allow you to take $10,000 out of your IRA without a 10% early distribution penalty if you're under age 59.5. Now, you still have to pay tax on that 10K, but you save the 10%. Now, I wish that 10,000 was higher. That number has not been adjusted for many, many years. It's been entrenched in the code for probably 40 years or so. So they have not increased that number, which is troubling. But at least it gives you 10K. So if you're looking to buy a house for $300,000 and you need 30K down at least, well, if you have an IRA, you can pull 10K out, pay tax, but at least get around the 10% early distribution penalty. So that's at least better than the alternative of paying the tax and a 10% penalty. There's also something called a 60-day. You have 60 days to pull money out of your IRA without tax or penalty and use that for any purpose. Now, here's the catch. You can only do that once every 12 months, and you got to put the money back within 60 days. And if you don't, whatever you don't put back is subject to tax and a 10% penalty. So if you're in a hole, you need to come up with some money to put down for a mortgage, for a deposit, for rent, for whatever it is. If you are confident you'll be able to return that money within 60 days, that 60-day rule is kind of a tax-free, penalty-free use of the funds for any purpose. But again, just to recap the rules, once every 12 months, you got to return those funds within 60 days. But during the 60-day period, you have free reign of those funds. Now, if you have a 401k, you have a few more options. Number one, you could take a loan. Most 401k plans have a loan feature that will let you borrow $50,000 or 50% of the account value, whatever's less, and use those proceeds for any purpose, including buying a home. Now, the good news is you actually don't have to pay that loan back in 5 years. Because you're using it to buy a principal residence, you can extend that loan period from or to 15, 20, or even 30 years. You have the ability to take out a loan that's reflective of the type of loan that is corresponding to real estate purchases. So you could do a $50,000 or 50% of your account value, whatever's less. So if you have 100K, you can borrow up to 50. If you have 40K, you can borrow 20. And you could take those funds, use it to buy a home towards your mortgage, down payment. And then instead of having to pay that loan back over 5 years, like a regular loan, because you're using it to buy a home, you can extend it over 30 years. Okay, so that's pretty cool. So it's your own little mortgage, but again, you have the ability to push that loan to 15, 20, or even 30 years, which is, a traditional loan for a home. So you get the ability to get tax-free, penalty-free use of those funds. And you also don't have to pay it back for at least 30 years. Now, one thing I want to be clear, it's for first home purchases, okay? So that's the catch. It's for first-time home buyers, right? For at least the $10,000 distribution I mentioned, right? The first-time home buyer is important, right? That's that $10,000. And if you want to take the loan out, you're able to extend that loan payment over that 30 years as well. So that's a interesting exception that a lot of people just aren't aware of, which obviously comes in quite handy when you need to use those funds to purchase a home. Okay, so just remember that it's a principal resident. So the $10,000 is for first-time home buyers, and the loan is for a principal residence. Does not have to be a first-time home purchases. It could be your 10th home, your 5th home, but it needs to be your principal resident, not a second vacation home or just an investment property. Principal business. So you get to extend that $50,000 or 50% account value over 20, 30-year loan. The minimum interest rate you have to use now as of November or mid-November 2022 is 7%, which is the highest it's been as far as I remember, at least 15 years. And just think about it, a year ago today, it was 3.25%. So it's gone up more than double, but you're paying yourself back. That 7% doesn't go to a bank, doesn't go to Visa, it goes to you. And you can extend a loan for a principal residence. Instead of 5 years, which would be the duration for a regular loan, you can extend it to 30 years. So you can use those funds for a down payment. Let's say you're buying a home for 400 grand. You need to come up with, let's say 50 grand. Okay. And you maybe have 10, 15 grand lying around in a savings account, but you have 100K in your 401k. You can borrow the 50K or at least up to it, use it for a down payment, and then pay your plan back the 7% over a 30-year period. So the interest, the loan payments, it's a flat straight line loan. So it's not a balloon payment, but instead of paying it over 5 years, you get to pay it over 30 years, which obviously is a huge, huge advantage. What else can you do with a 401k? Well, you got the loan feature. Also, from an IRA or 401k, this is really, I would say, a strategy if you have family members, non-lineal, so siblings, cousins, aunts, uncles, that maybe need money to buy a home, and you have money in your retirement account, you can serve as a lender to them. So they may say, well, interest rates are so damn high, Adam. I really need to buy a home. I need 30 or 40 grand. I don't have the money, or I need to fix up my home, whatever it is. And you can say, okay, I'll lend it to you at 4% or 5% or 6%. You have flexibility. Now, the one caveat is under the prohibited transaction rules, you're not able to do any transaction with a disqualified person, which is a parent, child, spouse, daughter-in-law, son-in-law, or any entities you control or are controlled by such persons. But brothers, sisters, aunts, uncles, cousins, friends, neighbors, they're all good. So you can do a investment, a loan transaction with such person. So if your brother or sister needs money for a down payment for a home, or needs, God forbid, needs medical money for medical expenses or credit card expenses, or needs to fix up their home because of, God forbid, a hurricane or whatever it is, you could lend those funds. You can't gift it, but you could lend it. It doesn't have to be 7%. It could be 3% or 2% or 4%. Lend it to your siblings. This way you can get a rate of return, whatever that interest is, and you're also helping your family members out if they need to buy a home or just need cash for whatever reason. So that's another interesting thing you can do with an IRA or 401k in the self-directed world, is you have the ability to structure alternative asset investments like a loan, so long as you're not lending it to a disqualified person, a parent, child, spouse, daughter-in-law, son-in-law, or any entities controlled by such person. So brothers, sisters, aunts, uncles, cousins, neighbors, friends, those are all fair game, and you could transact with such persons. So just to summarize, we're in a tough environment if you're looking to buy a home. It's just the bottom line. Interest rates have doubled, more than doubled in the last year. The good news is prices are coming down, but it's still not a buyer's market at this point. But let's say you just want to buy a home, right? You just are sick of paying rent. You need stability. You don't want your rent increased every year, or you're moving and you just need to buy a home. You have a couple options. Here's a summary. IRA, $10,000, first-time home buyer, pay tax, but get around the 10% penalty. If you need short-term use of money, you can do a 60-day in-kind distribution, take it all out once every 12 months, but you got to return it within 60 days. If you have a 401k and has a loan option, you can borrow the lesser of $50,000, 50% of your account value, use the loan for any purpose, including for a mortgage. And instead of having to pay that loan back over 5 years at a prime interest rate of 7%, you can extend that loan period to 30 years, which obviously will significantly reduce your payments back to your 401k. But again, the good news is you get tax-free, penalty-free, so the money, and you're paying yourself back instead of a bank. And then alternately, on a big picture from an investment standpoint, you could use an IRA or 401k to do a self-directed loan investment. So altruistically, you can help a friend, neighbor, family member who maybe wants to buy a home or has damages from a hurricane or needs to fix their home or has medical expenses, whatever the case may be. You can help those folks out. And at the same time, you can generate a rate of return for your IRA or 401k through a loan instrument. You don't have to use the prime rate. It just can be a gift. So you need to have some sort of interest, whether it's 2%, 3%, 4%. But this way you can help a family member or friend out, not a lineal descendant, but for example, a brother or sister or neighbor, and also get a nice rate of return for your retirement plan. So there it is. Hope today's podcast helped at least some of you. If you are a first-time home buyer, you have that IRA potential $10,000 penalty exemption. If you just want to buy a home, primary residence, and you have a 401k, you can do the loan feature. If you have an IRA but don't have access to a 401k at work, but you're self-employed, can always set you up with a solo 401k that will let you move your IRA to a solo K and then do a loan of $50,000 or 50% of your account value, whatever's less. Use that loan for any purpose, including buying a principal residence. And that loan now doesn't have to be paid back for 30 years. So again, if you're self-employed, have a business with no full-time employees, you have some options with the solo K where you can obviously, if you so desire, do a loan of $50,000 or 50% of your account value, and then have that loan payback terms extended from 5 to 30 years, which is obviously super attractive. So that's all. Those are really the core options you have. If you have an IRA or 401k and you want to tap into it to buy a principal residence, or if you're a first-time home buyer, there is that additional option for IRA holders. So I wish that $10,000 number increased for inflation. That number would be great if it was around 30 or 40,000, because the way home prices have increased over the last 8 to 10 years, 10 grand just doesn't move the needle anymore. But from a loan standpoint, that 401k loan of 50K, that helps, right? If you want to buy a home of 34, 300, 400, 500, 600, that extra 50K, yeah, can make or break you getting that mortgage. Now, again, mortgage rates are exceedingly high now, but if you need to buy the house, then getting that down payment, putting more down will help. Obviously, it will decrease the amount of mortgage you need, which will decrease the amount of interest you have to pay on those funds. But the bottom line is interest rates are super high now. Okay, so a lot of buyers are just standing idle. They're on the sideline. The thinking is, hey, there'll probably be one more rate hike. 23, mid to end of 23 rates will come down again. Inflation will be tempered, and the economy may sputter, and that could force the Fed to lower rates in order to accelerate more demand from consumers and help the economy out. And that will obviously bring mortgage rates down because they coincide with interest rates. So no one knows obviously what's going to happen, but seems to be that's I guess I don't want to say smart approach, but that's what a lot of economists are thinking, that there could be one more rate hike maximum, and it's potential that even in 23 rates will start coming down because of some of the weakness in the economy. But to be determined. Who knows? But my job here is just to give you guys the best, most tax efficient options to tap into your retirement account to help buy a home. Now, obviously, in a perfect world, you don't need to tap into your retirement to buy a home. You have plenty of money in your pocket or in your savings account or in your investment account to do that. But the world doesn't work that way, right? Everything kind of happens, and sometimes you just need to borrow a bit from your retirement account to take care of an immediate need, which is okay. There's nothing to be ashamed of. You just want to do it the right and smart way, so you don't have to pay, or you can at least minimize the amount of tax you have to pay on that potential distribution. And the best part of it is the 401k loan option. There's no tax or penalty, so it's a real tax-free, penalty-free to get use of those funds, and then have that 30-year window to pay off that loan, which I think is ultimately the best option. So thanks again for listening. If you're watching on YouTube, really appreciate it. Have an amazing week, and I'll see everyone again next Wednesday. Take care.